Good morning this Tuesday, the 10th of December. I'm Grady Wolf, market analyst with Bell Direct. Over in the US on Monday afternoon, Wall Street had pulled back from record territory as investors look ahead to key inflation data out later this week. The Nasdaq and S&P500 retreated from record highs to end Monday's session, down 0.61% and 0.62% respectively, while the Dow Jones ended the day down 0.54%. Nvidia shares lost 2.6% on Monday following a Chinese regulator announcing it is investigating the AI semiconductor giant for potentially violating the country's antimonopoly law. In Europe overnight, markets mostly extended the positive run from last week into the new trading week as investors assessed further stimulus talks out of China, which is a key trading area for Europe. The STOXX 600 rose for an eighth straight session to close 0.14% higher. Germany's DAX bucked the trend to 4.19%. The French CAC rose 0.72%, and in the UK, the FTSE 100 ended the day up 0.52%. Chinese leaders on Monday promised more proactive fiscal measures and moderately looser monetary policy for next year. Across the Asia region on Monday, markets closed mixed amid revised economic data out of Japan and on the release of China's November inflation data. Japan's Q3 GDP growth rate was revised upwards from 0.2% to 0.3% on a quarter-on-quarter basis, which topped analyst estimates and boosted Japan's Nikkei to a 0.1% rise on Monday. China's CPI, or inflation data, on the other hand, was also released on Monday and had the opposite response from investors, as inflation in the region rose just 0.2% year-on-year in November, which missed expectations and was a decrease from the 0.3% rise in October, indicating further sluggish recovery in the region. And this led to China's CSI index falling 0.6% on Monday. Hong Kong's Hang Seng also fell 0.6% on Monday, and South Korea's Kospi index ended the day down over 2% on political instability. The local market had a lackluster start to the week, however, recovered from some early losses on Monday to end the day with a rise of just 0.03%. Consumer discretionary stocks boosted the market to a positive close yesterday with a rise of 0.64%, while the energy sector fell 1.05%, tracking the weaker price of oil over recent weeks. Aussie telco provider Superloop rallied 1.8% on Monday after announcing it has entered into a deal to acquire Optus's subsidiary brand Uecomm for $17.5 billion, which will add over 2,000 kilometres of high-capacity fibre assets to Superloop's portfolio. Platinum Asset Management tumbled 14.35% on Monday after its takeover talks with Regal Partners ended with a no deal reached. This was on top of Platinum also announcing its funds under management took a major hit in November. And capital raisings hit quite a few companies yesterday, with share prices falling, like Calix ending the day down 12.22% after announcing the completion of an institutional placement that raised $20 million at 75 cents per share, while Paradigm Biopharmaceuticals tumbled 7.76% after raising $16 million at 40 cents per share, which is over a 30% discount to the previous closing price of the shares. On the commodities front this morning, oil is trading 1.95% higher at $68.51 a barrel. Gold is up 1.25% at $2,666.13 an ounce, and iron ore is down 2.05% at $104.11 a ton. The Aussie dollar has weakened overnight to buy 64.47 US cents, 97.7 Japanese yen, 50.19 British pence, and 1 New Zealand dollar and 10 cents. Ahead of Tuesday's trading session on the ASX, the SPY futures are anticipating the ASX will open the day up just 0.04%. We may also see investors react to the RBA's rate decision and commentary around the last rate decision for 2024 this afternoon, where it is widely expected Australia's central bank will hold the current cash rate at a level of 4.35% to see out 2024. And now let's dive into some trading ideas for your consideration today. Bell Potter has downgraded the rating on Platinum Asset Management from a hold to a sell and have significantly dropped the price target on the company from $1.21 to 74 cents, following funds under management dropping over 10% in November to $10.957 billion, and on the back of merger talks ending with Regal Partners. And Trading Central has identified a bearish signal on ARB Corp following the formation of a pattern over a period of 114 days, which is roughly the same amount of time the share price may fall from the close of $40.06 to the range of $31.50 to $33.25, according to standard principles of technical analysis. And that's all for this Tuesday morning. Have a wonderful day and happy investing.